Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 25th of June in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, $430 billion is wiped off the value of Nvidia as the chipmaker suffers the biggest three-day loss in history.
Julian Assange is to return home. The Wikileaks founder agrees a plea deal with the US that will see him avoid further jail time.
Plus, a housing crisis so big it would need a city the size of London to fix it. We look at why Britain has fallen so far behind its European peers in delivering new homes.
Let's start with a roundup of our top stories.
Nvidia's share price has entered correction territory after $430 billion was wiped off the AI chip giant's value in just 3 trading days. After briefly holding the title as the world's most valuable company, the 13% drop puts Nvidia's valuation back below $3 trillion, below that of both Microsoft and Apple. According to data compiled by Bloomberg, it is the biggest 3-day value loss for any company in history. Wealth Enhancement Group portfolio manager Ayako Yoshioka says markets are struggling to accurately value Nvidia right now.
I think it's really difficult to really ascertain what the total addressable market really is for artificial intelligence. It used to be sort of a rule of thumb when I was growing up in this business that anything over 10 times price to sales was just too expensive. And at 23 times, it's well above that. And so it does become very difficult. And it becomes more of a short-term guessing game in terms of supply and demand.
Ayako Yoshioka there speaking to Bloomberg Technology's Ed Ludlow. Even with the sell-off over the last few days, Nvidia is still the second best performer on the S&P 500 this year, up nearly 140%.
Now, the Federal Reserve has shown other US regulators a 3-page document of possible changes to their bank capital overhaul. Bloomberg understands that the changes would significantly lighten the load on Wall Street lenders. The revision is understood to walk back key parts of the landmark proposal and could lead to significant reductions in how much additional capital large banks are required to hold. Bloomberg's banking regulations reporter Katanga Johnson says that the move would be seen as a victory for Wall Street banks.
Generally, while there aren't any specific targets that the Fed has made, sources that we've spoken to say that if all the changes in this term sheet were to take effect, we could see a hike of at least or as low as 5% as opposed to the 16% across the board.
Katanga Johnson says that US officials haven't yet reached an agreement on the bank capital revamp, and it's still unclear whether a revised package will get across the finish line before the presidential election in November.
Julian Assange plans to plead guilty to leaking US national security documents as part of a deal with the US that will allow him to return home. The Wikileaks founder has spent the past 5 years in a British prison. The deal with the Department of Justice will mean his return to Australia. The current editor-in-chief of Wikileaks, Kristen Ranson, says that Assange has left the UK.
I just came out of Belmarsh prison in what I hope is my last visit to see Julian here in this prison where he spent 5 years, 2 months and 2 weeks. And if you're seeing this, it means he is out.
That's Kristen Ranson there speaking in a pre-recorded statement. The plea agreement seeks to end an international fight to prosecute Assange over WikiLeaks' publication of sensitive US military documents, including war logs and diplomatic cables in 2010 and 2011. It was one of the largest breaches of state secrets in US history.
France's president says that the policies of the far right in the upcoming elections could spark a, quote, civil war. Emmanuel Macron told the Generation Do-It-Yourself podcast that the National Rally Party's plan to tackle crime, focusing on people's religion or origins, is divisive and could lead to unrest. He also said that there were risks from far-left policies. It comes after the far-right leader Jordan Bardella said that his party is ready to govern if it wins the election.
7 long years of Macronism have weakened the country. The budget situation, at a near bankruptcy, as well as the security and migration disorders, are a call for unity. The National Rally today is the only movement capable of implementing the aspirations clearly expressed by the French people in a reasonable manner. In 3 words, we are ready.
En 3 mots, nous sommes prêts.
That was the National Rally President Jordan Bardella speaking there through a translator. His party is leading in the polls ahead of the first round of voting on Sunday, with one survey suggesting that the party could secure an absolute majority in the French Parliament.
The UK's 2 largest parties are both warning that the other would break the economy, as a leading think tank says they have ducked hard fiscal choices. Leaders Keir Starmer and Rishi Sunak have both invoked the memory of Liz Truss as they traded barbs on tax and spend policies. It comes as polls suggest Sunak faces an electoral wipeout. Conservative Kemi Badenoch didn't rule out standing to replace Rishi Sunak in a Bloomberg debate between the 2 potential next business secretaries.
I'm already the Secretary of Business and Trade, and it's actually been the job of a lifetime. We need to focus on this election. The choice is going to be between us or between them. Okay. Be afraid if it is them, is all I would say. And we will talk about leadership things after an election.
You can listen to the full debate between Kemi Badenoch and Labour's Shadow Business Secretary Jonathan Reynolds on YouTube or in the Bloomberg UK Politics podcast feed. In a moment, we'll look at the sudden drop in Nvidia's stock price and bring you new Bloomberg analysis on the size of the hole in the UK's housing market, with both the Tory and Labour parties promising to build more homes. But another story that caught our eye this morning, technology colliding with the creative industries.
Yeah, this is such an interesting piece. So the biggest record labels in the world are now suing a couple of AI startups for their training models using allegedly massive amounts of copyrighted sound recordings. So it's the industry body that's doing it, the Recording Industry Association of America. They filed lawsuits against Sono AI and also Uncharted Labs, which is the developer of Udio AI. It's a really interesting story. I actually had a look online at some DJs using Udio to make songs. They were making them in like 60 seconds with prompts, so it was so quick. I
really love the example in the story. People could write a short written prompt like an electro-pop song about strawberries. I want to know what that sounds like.
Well, the reason that you do that, according to the CEO of the business, is obviously you can't use an artist's name or particular album, but you can just ask in general for that music. The issue, though, is that the trade body is looking for damages. Do you want to know how much?
It's huge.
$150,000 per work infringed. So this is all going to court then, yes. Creative industries and AI clashing.
Yeah, indeed. An interesting reflection, I suppose, on how the creative industries are adapting to this huge change in technology as well, and the sort of challenges that it could present as we see it, AI being increasingly used in different industries and more extensively using as well. So this is going to be a really closely watched case to see how artists can protect their music, and also crucially how record labels can do that as well.
Now let's think about, the big move in US stock markets yesterday, of course. Nvidia's share price dropped 13% since it briefly overtook Microsoft last week as the world's most valuable company. It has pushed Nvidia's shares into a technical correction and seems to have shaken also the broad optimism about US equities, which have posted record after record this year. Joining us to discuss is Bloomberg opinion columnist covering technology in Asia, Tim Culpen. Good morning, Tim. Many explanations for the sudden rout. Nvidia's shares were down on Monday alone 6.7%. Why do you think it's happened over these last few days?
Well, there's nothing fundamental that's actually changed in the company. There's been no outlook change or anything like that. There's been no major announcements. It's worth putting in context that their estimated price-to-earnings ratio is 44 times, so that's pretty high. It takes 44 years to get back your money if you invested in Nvidia. But there's a few things happening kind of on the ground level that I think shareholders, investors, fund managers are starting to hear. And one of them is that there is concerns that those who are buying Nvidia chips, these chips that go into massive AI data centers, may not be able to install them quickly enough. And it's not easy to install an AI data center. They suck up a hell of a lot of energy, lots of electricity. And on the other side of that, there's a lot of heating that needs to be dealt with. They need to cool them down. They're using liquid cooling systems, like massive refrigerators attached to these server farms. And this is really, really difficult stuff. So what I'm hearing on the ground in Asia, but is also, I believe, persistent throughout both North America and Europe, is that the big companies, the big cloud service providers that want to install AI data centers are struggling to make the data centers that can really meet these standards. And if they can't meet those standards, they're not going to be able to buy more Nvidia chips going forward because they just can't install them, they can't power them, they can't cool them, and so forth. So that is a concern going forward. And I do wonder whether some investors are starting to hear those things.
Does this go as far as undermining confidence in the AI story, Tim?
No, look, the AI boom is here. I think we're really looking at, 1920s automobiles. There's going to be some hiccups. There's going to be times where, cars crash or there's not enough petrol stations or gas stations to fuel the cars or the roads are not that great. But, the long-term future of AI is definitely assured. The belief right now is, of course, is that Nvidia is the biggest winner of that. Who else are the winners? TSMC, maybe Amazon, maybe Apple, and all the other companies have their own AI plays. But the bigger thesis is absolutely intact. It's just a matter of what speed bumps are going to be on the way.
Yeah. What do you think it means, though, for the wider markets? I mentioned the kind of optimism that we've seen. What is it, 31 record highs for US equities this year?
Yeah, look, so much of what's going on in the US is about these companies. The eight largest companies in the world, 7 of them American, 2 of them, one is Saudi Aramco, the oil company. The 8th one is TSMC, which is in some ways de facto American. So you've got Apple, you've got Nvidia, you've got Microsoft, Amazon. All of these companies are in the AI space. So all the trillion-dollar companies are somehow connected to AI, except Saudi Aramco, whose oil, I guess, is powering some power stations. So, AI is really the big story of stocks right now, especially in the United States.
Okay, Tim Culpin, Bloomberg opinion columnist covering technology in Asia. Thank you very much for joining us with your analysis this morning. Well, let's take you to a story here in the UK now. Britain's housing crisis has become so acute that the next government will need to build the equivalent of another city the size of London to make up for 5 decades of below-target construction. That's according to Bloomberg analysis of official data. The trend has contributed to high living costs for many and is pricing so much of the population out of owning a home. Housing, one of the key issues in the UK election as well. And our reporter Eamon Farhat is joining us now for more. Good morning to you, Eamon. So give us an explanation. How did you arrive at a city the size of London? How many houses are needed in the UK?
Yeah, exactly. I mean, it's 4.3 million houses. And what we basically did is we looked at almost like the last 50 years and we tried to compare how much the UK was building and how much Western Europe, so countries like France, Germany, Spain, how much they were building. And if we were to have kept up with the pace of the rate of growth of housing in Europe, we would have had 4.3 million more homes. And that's what we should have. That's what kind of researchers think we should have to have, a housing market that isn't under as much pressure. 4.3 million, which is bigger than London, actually, when it comes to the number of homes.
I mean, it's a staggering figure, isn't it? And in terms of the shortfall then, obviously, perhaps quite a number of explanations for why we haven't built enough over all those years.
Yeah, I mean, one thing is when you talk about the housing deficit, it's on one hand about, the fact that we haven't had, the kind of planning system that allows for the housing that we need. It's, the fact that the kind of public housing stock also has dropped quite low, especially kind of starting in the kind of 70s, 80s, and that's for historic reasons when Margaret Thatcher was in power. And it's also about population growth. There are some parts of the country where the population has grown quite quickly and there just hasn't been the housing to keep up with it. So, on one hand, it's about the supply, but also the demand for housing, which in some places is going, it's about 10 to 1. 10 people have kind of been added to the population in some areas for every one house that has been built.
Which areas of the UK are we talking about as being the worst affected? Is this a London problem, Eamon?
I mean, it's interesting. When you look at the data, London does come up as being, quite bad, but actually it's sometimes the places kind of in and around London. So, places like Luton comes up as being one of the worst places in the UK. Birmingham comes up as being somewhere that's quite bad. I mean, I'd say that actually it's not just a London problem. This is something that's being felt across the UK. It's obvious that where big cities are, where the jobs are, often is where the housing is most stressed. But even, commuter towns, places up north as well, this is something that's being felt by people across, from Scotland down to the south of England.
And also, of course, in this election campaign moment, how the party's hoping to fix this. I suppose also, why have they not managed to fix it in the past? There has been a house building target that was then softened by the Conservatives in office, and Labour have a big pledge on this too.
Yeah, so whilst the Conservatives were in office, there was this 200,000 homes per year target. That was never reached. Labour now have said they're going to build 1.5 million homes in the next parliament, which is also 300,000 homes. I mean, just to say one thing is that all the targets that are out there would not, remove this deficit. It would take, I think, about, 14, 15 years with no population growth at the rates that they're talking about to remove the deficit. So it's quite difficult. I mean, it comes down to planning, I think. I think Labour, they're talking a lot about these goals, but it's about reforming the planning system and really getting big number of homes, built that could actually make a difference. And that's what really has held it back up to now.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.